Welcome back, everybody. Today, we're going to be diving into the world of McDonald's.
Ooh, fun.
Yeah. So we're going to be taking apart how they did in the last quarter and the entire year of 2024.
Yeah.
And for this deep dive, we've got two main sources that we're going to be taking a look at.
Okay.
We've got the official McDonald's Q4 2024 earnings release,
Mm-hmm.
and we've also got this financial report that's kind of giving a little bit of a deeper analysis.
Okay.
So by the time we're done with this deep dive, you'll know how they did financially, of course.
Of course.
But you'll also get some really cool insights into their strategies and the challenges that they're facing in the world of fast food.
I think it's so interesting. You see the golden arches, you think burgers, fries,
Right.
but behind the scenes, there's this whole story, this financial story going on.
Yeah, definitely a lot more than meets the eye.
Definitely.
So let's start with a global sales overview.
Okay.
McDonald's reported over $130 billion
Wow.
in global system-wide sales for the entire year.
That is a lot of Big Macs.
It is a lot of Big Macs.
Yeah.
But when we dig a little deeper, something that really stands out to me is their loyalty program sales.
Okay.
They hit a wild $30 billion with 175 million active users.
That's huge.
Yeah, and that's some pretty serious growth, especially when we consider that global comparable sales were basically flat.
I found that really interesting too.
Yeah.
Why are they focusing so heavily on this loyalty when the overall growth is kind of stagnant?
Right.
I think what they're doing is they're really playing the long game. They know that in such a competitive market, having those dedicated customers is going to be huge for them.
It's like a moat
Yeah, they're building a moat.
around their business.
Yeah, they're building a moat around their
A
business.
fortress of fries, if you will.
Exactly.
But let's look a little closer at those comparable sales figures, because
Yeah.
they do paint kind of a mixed picture of things.
There are some interesting nuances there.
Yeah.
For example, U.S. comparable sales actually went down in Q4, which is a shift from how positive things were looking earlier in the year.
Okay.
It's not like a complete disaster,
Right.
but it does make you wonder about the strength of their biggest market.
Yeah, for sure.
What's going on?
What's going on?
So in the earnings release, they're pointing to a decline in the average check,
Okay.
but they say that that's offset a little bit by increasing guest counts.
Interesting.
So people are still going to McDonald's.
Okay.
Maybe they're just not spending as much when they go.
Maybe those McCafe indulgences just aren't hitting the spot anymore.
Yeah, maybe. Or maybe people are being a little more careful about what they spend,
Right.
especially with inflation being a concern.
Yeah, that's very true.
It's hard to know for sure.
Yeah.
The earnings release doesn't give a lot of detail about the factors behind that decline.
Okay. So we'll have to wait and see, I guess.
Yeah.
All right. Now let's look internationally.
Okay.
We see slightly positive comparable sales overall, but that kind of hides some regional differences, right?
Exactly.
Like, for instance, the UK market dragged down performance,
Yeah.
but international developmental licensed markets saw the best growth.
That's really interesting.
Yeah.
I think the UK thing we definitely need to look into more.
Mm-hmm.
But that growth in developing markets, that just shows that there's so much opportunity for them to expand.
Yeah.
That could be where they focus their efforts in the future,
Yeah. Oh, no.
tapping into those new markets
Yeah, as the mature markets
as the mature markets
slow down.
start to slow down. Yeah.
So, good question. One that I think we might be able to answer a little bit better as we look closer at the financials.
Okay.
Let's do that.
All right.
So let's go over some of those harder numbers
Okay.
from the earnings release. Consolidated revenues,
Mm-hmm.
operating income,
Right.
net income, and diluted earnings per share.
Okay.
We'll look at both the quarter and the whole year.
Okay. When I first saw these, I was like, there's not much change year over year.
Yeah.
Revenues were basically flat for the quarter.
Okay.
And even though operating income and net income both saw some increases for the whole year,
Okay.
diluted earnings per share
Yeah.
stayed flat for the quarter and actually went down a bit for the entire year.
Oh, interesting.
But one thing that's important to remember is that these numbers include restructuring charges and property transactions.
Right.
And that can make things look a little different than they actually are.
Yeah, for sure. So yeah, not a huge leap forward,
Yeah.
but not a total disaster either.
No.
What I'm really curious about is what the financial report says about their profitability
Oh,
and their cash flow, because I think those tell us a little bit more of the story.
I think so too. And that's where things get really cool.
Oh, okay.
Yeah, the financial report shows us that their profitability is really strong.
Okay.
Their gross margin is sitting at a really impressive 56.76%. which basically means that for every dollar of sales, they're keeping about 57 cents after covering the cost of making all those burgers and fries.
Okay.
And then their operating margin
Yeah.
is around 45.73%,
Yeah.
which means they have good control over their operating expenses.
Rice.
And their net profit margin
Okay.
comes in at a very healthy 31.72%,
Yeah.
which is just the percentage of revenue that actually becomes profit.
Okay.
And the real kicker is their return on capital employed.
Yeah. What is that?
It's a whopping 23.10%.
That's a big number.
That is a big number.
Yeah.
So what this tells me is that even though their overall growth might be kind of small,
Yeah.
they are so good at getting every bit of profit they can from their operations.
That's good.
It is.
Okay. Now, for something I'm kind of confused about.
Right.
This financial report says that McDonald's has negative shareholder equity.
Yeah.
Which, if you don't spend all your time reading financial statements,
Right.
sounds kind of bad.
Yeah, it definitely catches your eye.
Yeah.
But it's not time to panic yet.
Okay.
It's mostly because of something called goodwill and intangible assets from acquisitions.
Okay.
So basically, when McDonald's buys another company,
Mm-hmm.
they often pay more than what the company's assets are actually worth,
Okay.
like on paper.
Okay.
And that extra that they pay gets recorded as goodwill.
Okay.
And that reflects the value of things like brand recognition, customer relationships, or intellectual property.
So it's like saying, hey, those golden arches are worth more than just the buildings and fryers.
Exactly.
Okay.
And this is something that happens a lot in industries where the brand is super important,
Right.
especially for companies that have gotten bigger by buying other companies.
Okay.
It's kind of like when you're buying a house,
Okay. Okay.
but you're willing to pay a little extra because it has a great garden or a beautiful view.
Right.
Those are intangible assets
Yeah.
that make the whole thing worth more, even though you can't really touch them.
Yeah. That makes sense.
Okay, so back to McDonald's.
Yeah.
It doesn't necessarily mean they can't invest or grow, but it does make their financials more complicated.
Right.
And some lenders or investors might be a little unsure because of it.
Okay.
So it's something to keep in mind as we go forward, you know?
Yeah. Definitely something to keep in mind.
Yeah.
All right. So we've covered a lot.
We have.
From global sales trends to profit and that interesting negative shareholder equity thing.
Mm-hmm.
Let's take a second to process all this before we move on.
Yeah, I think that's a good idea.
And analyze their strengths, their weaknesses, and what all of this means for investors.
Sounds good to me.
Okay, we'll be right back after a short break.
Okay, so let's shift gears a little bit.
Okay.
We've been looking at all these numbers.
Yeah.
But what about the big picture?
Yeah.
What are McDonald's core strengths?
Right.
And, what might be some of their weak points?
Yeah, love it.
Like what stands out to you from this financial report?
So many things.
Yeah.
One of their biggest strengths, for sure, I think, is their cash flow generation.
Oh, yeah,
Yeah,
absolutely.
like we touched on this a little bit earlier.
Uh,
But they are pumping out billions of dollars in free cash flow.
yeah.
And that gives them the ability to kind of weather any storms that come up.
Yeah, it gives them a cushion,
Yeah,
to
exactly.
deal with unexpected problems.
Exactly. And to keep investing.
Yeah, to invest in growth.
Yeah. And to make their shareholders happy.
Exactly. Keep everybody happy.
Right.
And that's a really powerful position to be in, especially with all this economic uncertainty going on.
Yeah, for sure.
And then their profitability, which we already talked about.
Right.
Those margins are so impressive.
Yeah.
It's like they have a secret sauce for efficiency.
Yeah. And I'm not talking about the Big Mac sauce.
Exactly. Not the Big Mac sauce.
Right. So they've got that going for them.
Yeah, and don't forget about those golden arches.
Yeah. Yes.
Brand recognition is such a huge asset for them.
Especially as they expand into new markets.
Oh, absolutely.
Mm.
McDonald's is basically synonymous with fast food
Mhm.
globally.
Yeah, you see that logo anywhere and you know exactly what you're going to get.
Exactly. And that's really hard to replicate, that kind of brand power.
Yeah, for sure.
But of course, every business faces challenges.
Right. No business is perfect.
So what are some of the risks that this report talks about?
Yeah, what are we worried about?
Well, one of the big ones is that they have a lot of debt,
Okay.
high leverage, they call it.
Okay.
Like right now, it's about 6 times their EBITDA.
Oh.
That's more than a lot of other companies in the industry.
Right.
Now, debt can be a good thing sometimes.
Okay.
It can really boost profits when times are good,
Okay.
but it also makes things riskier when things aren't so good.
Yeah.
So if interest rates go up a lot,
Right.
or if they start making less money,
Yeah.
that debt could become a big problem.
So it's like they're walking a tightrope a little bit.
Yeah, exactly. A financial tightrope.
And then there's that thing we talked about with their negative book value.
Right. Mostly because of all that goodwill and intangible stuff. It's not necessarily a bad thing on its own,
Yeah.
but it does make things a little more complicated,
Yeah.
And some investors might not be too happy about it.
So basically, they've got these internal challenges.
Yeah.
But what about external things that they can't really control?
That's a really good point.
Yeah.
Because they're not operating in a bubble,
Yeah. Right.
The report talks about macroeconomic sensitivities.
Right. And I think the big one there is inflation, right?
Oh, definitely.
It affects how much it costs them to make their food.
Right. It's more expensive for them to buy the ingredients and stuff.
Yeah, so those burgers and fries are getting more expensive to make.
Yeah. And at the same time,
Yeah.
it's harder for people to afford to eat out.
Exactly. So people might be thinking twice about those extra value meals.
Exactly.
Oof. So it's kind of a double whammy for them.
It is. And then, of course, there's always the competition.
Ugh. Yeah, the competition is fierce.
Oh, it's a battle out there.
Right. Every burger joint, chicken place, taco truck is trying to get people to come to them.
Yeah, they all want a piece of that fast food pie.
Right. So McDonald's can't just sit back and relax.
No, they have to keep innovating
Yeah.
and keep adapting to stay ahead of the game.
So they're not just trying to have the best fries.
No.
They're trying to have the best everything.
Exactly. They have to keep raising the bar.
So how are they dealing with all these challenges?
Well, they're not just sitting around and hoping for the best.
Yeah.
They're actually being pretty proactive.
Okay, good.
For example, they're investing a ton of money in technology.
Like what?
Well, they're doing things like AI-powered drive thrusts and mobile ordering and delivery platforms.
Yeah.
They're even experimenting with robot chefs.
Whoa, what?
Yeah. And automated kitchens.
That's like a sci-fi movie.
I know, right?
It's happening now.
And they're modernizing their restaurants with digital kiosks and stuff like that.
Yeah, they want to make things faster and more efficient.
Yeah. And don't forget about their loyalty programs.
Right.
That's a key part of their strategy.
Yeah.
They're trying to keep their customers coming back for more.
And fight off the competition.
Exactly.
Yeah.
They want to build a community around their brand.
Yeah, I like that. It makes it less transactional.
Yeah.
Less like, here's your food, see ya.
Right. More like, welcome back.
Exactly.
We're glad you're here.
And they're also doing a lot with sustainability and social responsibility, right?
Yeah, that's their ESG commitments.
Right.
They're really trying to do the right thing.
Yeah. Which is good for their brand image.
Oh, yeah. Especially with younger consumers who really care about that stuff.
Right. They're not just appealing to our stomachs.
No, they're appealing to our hearts, too.
Exactly.
So basically, they're trying to meet the customer wherever they are.
Yeah.
Whether it's on their phone or in their car.
Or at home on their couch.
Yeah, or even just walking down the street.
Yeah. I
They
mean,
want to be everywhere.
it's like they want to make it as easy as possible, like
Exactly.
at McDonald's.
Yeah, they want to be the most convenient option.
All right, so let's switch gears again and
Okay.
talk about things from an investor's point of view.
Okay, so from the investor's perspective,
Yeah.
this report looks at some valuation metrics.
Okay.
Things like PE ratios, price-to-sales ratio,
Mm.
and enterprise value to EBITDA.
Yeah. Break it down for us.
Okay, so basically these are just ways to figure out if a stock is a good deal or not.
Right. Is it overpriced, underpriced, or just right?
Exactly. And what these metrics are telling us is that investors are kind of cautiously optimistic about McDonald's.
Okay, so like they see the good and the bad.
Yeah, exactly. Like their price-to-earnings ratios are a bit higher than some other fast food companies.
Okay.
So some investors might think they're a little overpriced,
Okay.
but their financials are really strong.
Yeah, we talked about that.
And they have a lot of potential for growth.
Especially in those developing markets.
Exactly. So that might justify the higher price.
So it's not like a steal,
Mm-mm.
but it's not ridiculously expensive either.
Right.
So I guess it depends on what kind of investor you are.
Yeah, exactly. What are your goals and how much risk are you comfortable with?
Yeah.
It's all about finding the right fit.
Okay, so that's PE ratios.
Yeah.
And then there's this other thing, the price to sales ratio.
Right. That compares how much the company is worth to how much money they make in sales.
Okay.
And for McDonald's, that ratio is also a bit high,
Okay.
which shows that investors think their brand and market position are really valuable.
So they're willing to pay a premium?
Yeah, exactly. They're betting on the future of McDonald's.
Interesting.
The report also points out that McDonald's pays pretty consistent dividends.
Okay.
They currently have a dividend yield of about 2.3%.
Okay.
That's pretty attractive to a lot of investors.
Yeah, especially these days. So it
Yeah.
sounds like McDonald's is a mixed bag.
It is. It has a lot of strengths, like their cash flow, their brand, their dividends.
Mm-hmm.
But they also have some weaknesses, like that high debt.
Right.
So it really comes down to how much risk you're willing to take.
Okay, so before we finish up,
Yeah.
anything else that really stood out to you from these reports?
You know what I keep thinking about?
What?
Their focus on technology.
Yeah, that was really interesting.
It's like they're going all in on it.
Yeah, they're really trying to change the fast food game.
Exactly. They're investing so much in these AI-powered drive thrusts
Yeah?
and personalized mobile ordering
Yeah.
and even those robot chefs
Right.
and automated kitchens.
It makes you wonder what it's going to be like.
I
Go to
know.
McDonald's in a few years.
Like, will we even have to talk to a human?
Right. Will we just order through a screen or even like talk to a robot?
Maybe we'll just tell our smart speaker, hey, order me a Big Mac,
Yeah.
and it'll just show up at our door.
And maybe those fries will be delivered by a drone or something.
I know. It's crazy to think about.
Yeah. But it's exciting too.
It is. McDonald's is trying to stay ahead of the curve.
Yeah. And I
Oh,
think
yeah.
these investments could change the whole fast food industry.
Oh, absolutely. This could be a game changer.
Yeah. So it's something to watch for sure.
Definitely something to keep an eye on.
All right, let's take a step back for a second.
Okay.
And think about everything we've learned about McDonald's in 2024.
Yeah, it's been quite a journey.
It has. So
Yeah.
for our listeners out there, what are the
Yeah.
the big takeaways you want them to remember from all of this?
I think the most important thing is that McDonald's is still in a really strong financial position.
Okay.
They are incredibly good at making money.
Mm-hmm.
And they're staying profitable, even with all the, rising costs and the economic uncertainty.
So those are definitely good signs,
Yeah.
but they're not completely invincible, right?
That's true. They still have some vulnerabilities.
Okay, like what?
Well, we talked about their debt.
Right, right.
That's something that can't be ignored.
Yeah.
If interest rates go up or the economy takes a hit, that debt could become a real problem.
So that's a bit of a gamble.
Yeah, it's a calculated risk.
And what about those things we talked about, like brand recognition and customer loyalty?
Oh, those are absolutely essential for them to succeed in the long run.
Okay.
They're putting a lot of effort into keeping their brand strong
Mm-hmm.
and make sure their customers are happy.
Right. And a big part of that is their technology investments.
Oh, yeah, that's huge.
It's like they're trying to completely change the fast food experience.
It's super interesting to think about what the future holds.
I know, right? Like, what if we have fully automated kitchens?
Yeah, or personalized menu recommendations.
Oh, that'd be cool.
Imagine you walk in and it's like, hey, based on your past orders, we think you'll love this new burger.
Yeah, and what if they start using drones to deliver food?
I know. The possibilities are pretty wild.
You know, a little scary, maybe.
Yeah, there are definitely some potential downsides to all this technology.
Like, what?
Well, one of the big ones is the impact on jobs.
Oh, right.
As McDonald's automates more things, what happens to the people who used to do those jobs?
That's a really good point.
It's like a complex issue
Yeah.
that goes way beyond just the fast food industry.
Yeah. It's something we need to be thinking about as a society.
Absolutely. Technology is changing everything so fast.
Yeah.
We need to make sure it benefits everyone, not just a few lucky people.
I completely agree.
So as we wrap up our deep dive into McDonald's,
Yeah.
what's the final thought you want to leave our listeners with?
That's a good question.
I think it's important to remember that McDonald's is at a crossroads right now.
Okay.
They're facing a lot of challenges,
Yeah.
like the economy, changing customer expectations, and all this new technology.
Right.
The choices they make in the next few years are going to have a huge impact,
Yeah.
not just on McDonald's, but on the whole fast food industry.
Yeah. And maybe even on the whole workforce.
Exactly.
So it's kind of a big deal. I like how you said that McDonald's is like a microcosm of what's happening in the world.
Yeah, that's a good way to think about it.
Even something as simple as a fast food chain
Right.
can tell us a lot about the bigger trends and challenges we're facing.
I agree. It's all connected.
Well, that's about all the time we have for today.
Okay.
Thank you so much to our expert for guiding us through this fascinating look at McDonald's.
It was my pleasure.
I hope everyone listening learned something new and maybe even got a little bit inspired to think differently about the world around them.
I hope so too.
Until next time, keep exploring, keep asking questions, and keep learning.
And keep eating those fries.
Yeah, those fries are pretty good.
They are.
All right, see you next time.
Bye.